Joining us this morning, R.Chandrashekhar, former President of NASSCOM, and we also have with us Ravi Menon from Elara Capital, who tracks the sector rather closely. Gentlemen, morning. Mr. Chandrasekhar, if I could start the discussion with you firstly. You know, 2018, like my colleague rightly described, has turned out to be a very good year for Indian IT. US tax cuts clearly spurred higher spending by companies and thereby leading to broad-based demand, and rupee depreciation also lifted gains further. Are you seeing the same kind of momentum extend into 2019 as well? Or would you say that that is going to be a heightened expectation?
Well, let me just respond in two parts. The first is that, the big headline story in my view of 2018 is that while in 2016, a lot of people were talking about, the death of the Indian IT industry and the advent of digital is going to finish off the industry, etc. And 2017 did prove, in fact, a fairly challenging year for a whole variety of reasons. But in 2018, a lot of the headlines now are about how, the IT industry has actually made great strides in the digital space and, in fact, today has reached a point where digital accounts for 25 to 30% of its revenues. So I think, we need to separate out longer term trends which are based on technology shifts and business shifts in the business from more short term implications and impact of economic boom bust cycles, whether it is because of things like, the US economy or Brexit or rupee appreciation or tax cuts, etc. So I think if you look at the longer term impact of technology shifts and business shifts, the IT industry has certainly earned its spurs time and again, and this is another time when it has shown enough and more resilience to weather all those challenges. The second is, so on that front I would say 2019 could actually be a consolidation of the trends that we are seeing now, possibly even an acceleration in terms of getting greater foothold in the digital space, which has already begun. The other part on which there could be some concerns are with regard to some of the global factors which were just mentioned a little while ago. There are concerns about the US economy and what might happen in the US economy once the immediate euphoria of the tax cuts sort of wanes, and once the effect of trade wars and so on impacts as inevitably the US economy as well. So those are certainly some concerns. Brexit, I think, is actually turning out to be a mixed bag, not unfavorable entirely to India. In fact, one might even say that in some senses it has actually had positives for India, because it has actually made Indian techies on a co-equal footing with people from Europe, for example. So I think that Brexit I would not think of as a big challenge from the longer term perspective. Any impact on the UK economy, of course, would certainly be felt by the IT industry. But so net, I think these are certainly huge positive aspects. There are a couple of areas of some concern. And those also relate
I
to
just
some
urge
of the
you to hold on to that thought, and I'm gonna come to you, Mr. Chandrasekhar, for what exactly may not work for IT sector stepping into 2019. But we've got some important news, Mr. Chandrasekhar, to address. So I urge you to just stay with us. Ravi, you too as well. Move forward. And Mr. Chandrasekhar, apologies. These are just such sensitive news pieces that they have to be addressed given how the stock markets have been reacting to recapitalization news of late. But you were talking about what may not work for the IT sector in 2019 amidst all this momentum, the kind of rupee depreciation which we have already seen, and the kind of US growth and tax cuts, etc., which may actually spur higher spending. But what do you think could peg the sector back?
Well, as I said, the deal pipeline is strong and, the growth momentum is very much there. We might see some appreciation of the rupee, especially with the oil prices coming so low. But that apart, if you look at the segment that I have some concerns about, it would be the startup ecosystem. Now, there, 2018 again was a good year. Excuse me. We saw, the largest investment of over 5 billion coming into the sector. We saw nearly 1,200 startups coming up. We've seen a greater, concentration of deep tech companies, which is a very good sign. In fact, the percentage has gone up substantially in the last 1 year. However, I think the points of concern there are twofold or threefold. Number one is that if you look at the investments and try to disaggregate it, a lot of this has come into the large companies. We saw the emergence of a number of unicorns. In fact, we saw a record number of, I think, 7 or 8 unicorns coming up during this year. And in some sense, a lot of that capital infusion is also linked to that. But if you look at the angel investments, then actually that has shrunk. In 2017 it had shrunk, and 2018 also I don't think that there has been a huge correction of that. In fact, the more recent moves on the angel tax and some aggressive moves by the tax agencies actually have been a significant dampener for this vital aspect of the startup ecosystem, that is the angel investment. So unless I think there is that is done with some caution, the flow of startups from India to Singapore and the US could actually accelerate, which is not a good thing. It's not also a good thing for important sectors like healthcare, fintech, agri-tech, which require all of this innovation. Excuse me. Apart from that, the recent moves in the area of data privacy and data security, while it's a good thing that the value of data has been recognized and India is making some moves to ensure that the economic value of this data remains with India and
right. Mr.
is used to help companies to grow. The balance between security and privacy and economic may still need some correction. So these are some of the areas that I would flag.
Right. Ravi, I want to get you in on the discussion as well, because like we were just discussing with Mr. Chandrasekhar as well, 2018 has definitely gotten off to a very smart start. There was tax cuts which was driving high US spending by US companies, which led to, I guess, this broad-based demand which we saw kick in, and solid deal wins as well for vendors too. But do you think that this kind of momentum can sustain itself in 2019 as well? And are we closing the year on expected lines?
I would think that when the year began, no one expected the rupee depreciation to be so sharp, or so sudden. So I think that's a positive surprise. I think the growth momentum was along expected lines. Perhaps people don't expect TCS to do so well as they have. But when they closed last year with so many deal wins, I think that was almost factored in. This year we haven't seen as many large deal announcements from TCS, but I think only half the year is past really. So we should see more over the next over this quarter's call, and I think in Jan to March. So we are expecting next year to be very strong. We think that the US economy continues to do well, and once IT projects get started, it's not really easy to slow things down. Even if there is a slowdown in the economy, you actually have to go ahead. So we think that demand is it's going to remain strong for the next couple of years.
Right. Ravi, could slowing global growth, Brexit uncertainty, trade friction weigh on 2019 client budgets? Mixed cues coming in from Cognizant and Accenture give us an indication of the same.
No, I think that you cannot expect returns to exceed CY 2018. That would be not realistic. I mean, this was an exceptionally good year for Indian IT services in terms of stock returns. I think that you should not expect a re-rating. You should only look at earnings growth to drive returns from this point on. And there is also a slight risk of derating of sorts if any event happens, right? So a hard Brexit or something else like we always slip into an outright global recession. Yes, these are risks that we have to factor in. But overall, I don't think that those are not things that people can worry about too much. I mean, these are things outside our control. So I would suggest people to stay invested because I really can't see too much downside apart from these macro risks.
Mr. Chandrasekhar, which model of services would you be most bullish on, and how do you think IT companies can draw the balance between on-site and offshore?
Well, I think that the big story, as I was briefly mentioning, is on the role that Indian companies are playing in digital transformation stories across the world. That consolidation is extremely significant because A, it proves the continued robustness for the industry, the continued growth opportunities, because that's the future. And the second is it also opens up opportunities to get slices of the revenue pie of sectors which are critically dependent on IT, and in fact where we are actually seeing the merger of technology and those particular businesses. E-commerce is an example of retail and technology coming together, and one can find similar examples in other spaces as well. In transportation, the Ubers and the Olas, for example. So all of these, I think, are significant opportunities which would certainly be good for the IT sector, and that is something that they would certainly be aiming for. It's on the innovation and the technology development that while the opportunities are becoming visible, especially because technologies like AI and data analytics are critically dependent on large mountains of data, and India has those mountains of data, and we are in the process of, as a country, I mean, we are in the process of figuring out how best to leverage that data for the advantage of the country, and that can only be good news for the industry that is operating within India. So relatively speaking, the industry from India, whether it is Indian companies or other companies, the value proposition is still extremely strong.
Fair point. Ravi, as we wind down the discussion, wanted to get you in here and get a little company specific. Do you think TCS will continue to outperform, or Infosys can get back its mojo under Salil Parekh? And also the street is not very happy with HCL Technologies' big product spending, while TechM is looking at a revival to industry run rate, though the same can't be said about Wipro.
See, I think that if you are willing to be patient, I think HCL Tech would give good returns. It may not actually even be over calendar year 2019 because the best quarter for IBM products is October to December. So the results for that might actually be visible only in when they report results in Jan 2020. But if you have that long a horizon, that's our top pick right now in the sector. Because I think the margin expansion that they will show in Q3 of next year, that's when they report results in Jan 2020, that will be a positive surprise. We also think organic growth momentum, there is a lot of cross-sell opportunities with services. So we think the services growth will start picking up after this recent product acquisition. And that too will become visible, maybe about 6 months from now to 9 months from now. So it's still a long time frame for this to play out. But the stock correction is unwarranted. I mean, if you look at it, the market cap loss was almost the entire amount they paid out. I mean, surely the deal is not so bad. It does give them a lot of capability. It positions them strategically with clients. There is opportunity to set up new services in a way that the peer group cannot. So it's interesting. I think this deal will really change the trajectory for HCL Tech and position them very differently compared to the peer group.
Right. But Ravi, from mid-tier IT universe, will L&T Twins, Mindtree, NIT Technology, Zensa retain the favourite tag, or do you think there are some more attractive bets now?
So I'm actually working on a mid-cap report because we think mid-caps now have a good window of opportunity. It's narrow, but I think the response has been pretty good. There is a lot of sales transformation. So we saw LTI, which I don't currently cover, but it's going to be added. That's been doing really well. I currently cover the engineering services firms, which we think that's a whole. It's an industry view that we think both LTTS and Cyient will do well. LTTS, being a little bit more broad-based, I think deserves the premium that it trades at over Cyient. So so within the pack, for the firms that I cover right now, which is LTTS and Cyient, I would recommend both.
Okay, Mr. Chandrasekhar, Ravi, both of you, thank you so much for taking the time out and joining in the discussion as to how 2019 is going to be for one of the market leaders, that's IT, as a sector. But